Hi everyone, this is attorney Maria Baler at the law firm of Samuel, Sayward and Baler, located in Dedham, Massachusetts, where we focus our practice in the areas of estate planning, elder law, and estate and trust administration. Welcome to this week's edition of Smart Counsel for Lunch. I have some very exciting news for everyone today. The governor last week finally signed the much anticipated tax bill, which increased the Massachusetts Estate Tax Exemption amount to $2 million. As many of you know, for many years back, since 2006, Massachusetts has had a $1 million estate tax exemption, meaning that if your estate was over $1 million at the time of your death, you had to file an estate tax return and pay tax unless you were leaving assets to your spouse or to charity. We also had what was called a cliff, meaning if you were over the $1 million threshold, you paid tax from the first dollar of the value of the estate. If you were under $1 million, you paid no tax at all. This new law changes that in a couple of significant ways. First of all, it provides that if you have an estate that is $2 million or less, you will not pay any estate tax. And your estate, if you have an estate that is over $2 million, your estate will essentially get a credit for the tax that's due on the first $2 million. So instead of this cliff that we used to have where you're paying tax all the way back to $1, if your estate is over the threshold, you have a true $2 million exemption, which means that the tax will only be paid on the amount over $2 million. So that's great news for many people in Massachusetts. You know, we've been saying for years, if you own a home in Eastern Massachusetts, if you have a 401k, if you have some life insurance, chances are you have $1 million in value in your estate, whether you think so or know it or not. And when we say estate, we mean the value of any asset you own or control or have an interest in at the time of your death. So this includes real estate, bank accounts, investment accounts, IRAs, annuities, personal property of value, life insurance that you own. All of those things get added together to determine the value of your estate at your death. So it wasn't that hard to get to $1 million, and now we can have a full $2 million that we can pass estate tax-free at death. So that is very good news for many of our clients. One important thing to note is that we do not have the concept of portability in Massachusetts, and that did not change with this new tax law. Under the federal estate tax law, which has a very high exemption amount, this year $12.9 million per person, if a spouse dies and does not use their whole exemption, meaning they don't pass all of that exemption or all of that value to people other than a spouse or charity at death, they can leave their unused exemption amount to their spouse by filing, making certain filings in a timely way with the IRS. And that allows the surviving spouse of that person to then have a much larger exemption when they die if the value of their estate has increased at the point of their death. We hoped for that in Massachusetts, but the bill did not include that. So what that means is we still have to do estate planning to make sure that each spouse, each member of a married couple in Massachusetts is able to fully use their $2 million estate tax exemption. And if used properly, if planned properly, a married couple could pass as much as $4 million estate tax-free. That typically involves the use of credit shelter trusts, which many of you are familiar with. And for years we have been telling you it's really important to make sure your trust is funded with at least $1 million, right? At least the Massachusetts exemption amount, so you can take full advantage of that at the first spouse's death. Now, our advice will be, let's see if we can fund your trust with $2 million, because that's the maximum amount we can shelter for Massachusetts estate tax, and we want to take great advantage of that. So if you have a taxable estate, $2 million or more, it's crucial that you do estate tax planning. If you already have estate tax planning in place, please feel free to reach out to us and make a time to speak with us about how this impacts your own estate plan. One other thing I want to bring up that's really important is that this new tax law is retroactive to January 1st of 2023. So if you're not dead yet, that's not a big deal. But if you had someone in your family or someone you know who passed away between January 1st and now, and they had an estate that was previously taxable, meaning that their assets at the time of their death were $1 million or more, but maybe less than $2 million, they've basically just won the lottery after death, because now there will not be any estate tax due in their estate, when previously, before this law was signed, there would have been. So the estate tax returns are due 9 months after death. So if you died on January 1st, your estate tax return is going to be due on October 1st, which means that we're just beginning to timely file, returns for people who died in early 2023. However, some people may have to file their return early or pay tax early. This happens often if real estate is sold before the estate tax return is due. And so in those cases, sometimes tax may have been paid in early, so there will need to be filings done to get that refund back to the estate because tax is no longer due. So those are all important things to keep in mind if you are the personal representative of an estate or the trustee of a trust where someone has died during 2023 and you believe estate tax is owed on the estate. Make sure you contact the attorney who's handling the estate or trust administration and find out if this new law benefits you in any way, and get updated advice on any estate tax that may be due. So that's a lot of information, but very exciting. We're happy to talk to you. If you have any questions, please feel free to give the office a call, and we will schedule a time for you to speak with one of our attorneys. In the meantime, thanks for watching. Please like this video or subscribe to our YouTube channel if you'd like to see more or be notified when our new videos come out. And I'm sure we'll be talking about this estate tax change and the planning that results from it more in the coming months. In the meantime, have a great day, and we'll talk to you soon. Thanks.